Hi guys, and welcome back to Cash Bright, your guide to investing in an ever-increasingly uncertain financial world. NIO's stock is something of a contradiction, and it has to be said that it makes my head hurt to try to reconcile its inherent Jekyll and Hyde nature whenever I'm thinking of buying this stock. What do I mean? Well, NIO is a Chinese company which designs and manufactures premium electric vehicles. The company was founded in 2014 and is seen by many as China's answer to Tesla, the well-known American electric vehicle company headed by Elon Musk. Now, it won't have escaped your attention that Tesla's stock price literally exploded this year, and this frenzy has filtered through to rival EV stocks such as Nikola and NIO. NIO has performed better than expected during Q2 of 2020, delivering more than 10,000 vehicles, and its earnings per share increased 67% over the previous year to 15 cents. Since the beginning of July, NIO's stock price has increased more than 160%, from $8 a share to around $20 a share towards the end of August. Many analysts are projecting the stock price to keep going up, and given the company it keeps in this sector, such predictions are hard to argue with. So all is rosy, you might say. Let's buy now and avoid missing out. Well, hold on. Herein lies the problem. If we look under the hood of NIO, we can see that the fundamentals of the business are questionable, and there is a reasonable concern that a breakdown could be around the corner. What's troubling for me as an investor is the fact that NIO is a loss-making company. Whilst investors may be able to overlook this fact for the likes of Tesla and its eye-catching innovations, can we really do the same for NIO? A company, lest we forget, which received a $1.4 billion bailout from the municipal government of the Chinese city of Hefei in early 2020. Whilst the NIO brand has enjoyed success in its native China, the future of the company will depend on the extent to which it is able to expand its marketing efforts into the US and Europe. Indeed, much of the justification for optimism from professional investors comes from the potential earnings of the company expanding its operations into new markets. Looking at the economy, which is still feeling the effects brought about by the pandemic, perhaps it's fair to say that investors are being a tad over-optimistic. Now, don't get me wrong, the company does have the potential to succeed given how EV technology is on the cusp of going mainstream, but the company will need to overcome quite a few hurdles before it is able to emerge as a sustainable, profit-making business. And so, with such a contradiction between market sentiment and the fundamental financial position of the business, you see why I struggle with this stock. Whilst it would be easy to ignore the recent rises in the stock price as mere speculation, the market keeps pointing towards the stock, maintaining its upward momentum, and for both long and short-term profits to be made. The stock market is not rational at all, but if we are too risk-averse, I believe opportunities will be missed. Indeed, Tesla is a stock which is overvalued relative to its core financials, and yet the consensus from the stock market appears to be that electric vehicles are the future, and that the true value of these stocks can be found in the years to come. Only time will tell as to whether this is right, but if you want to make a return on an investment, you of course have to accept some risk. This is why I tentatively lean towards buying this stock. The momentum and market sentiment is with NIO, and it's hard to ignore this upward trend. Still, it would be wise to exercise caution with this stock, and as always to ensure that your investments are diversified and not overly concentrated. I do hope to see EV technology thrive over the next decade, and for NIO to grow into a key player in this sector. Buying the stock is certainly a gamble, but I believe it's one worth taking at this particular point in time. But what do you think? Do you agree? Or do you think it's best to avoid this stock altogether? As always, feel free to discuss in the comments below. Thanks for watching. If you found this video to be helpful, please leave a like and don't forget to hit the subscribe button. And until the next time, stay sharp, stay hungry, and stay cash bright.